So the attack on crypto continues. Bitcoin, exactly as predicted, falls, collapses out of this symmetrical triangle pattern. Now, CZ being sued by the CFTC along with Binance US. What is going on? Has this war on crypto just escalated to the next level? In this video specifically, I'm going to be talking about a few key risks which nobody is talking about. Everybody's talking about Operation Choke Point, which is absolutely correct. They're shutting off some of the on-ramps onto crypto to stop people from using crypto. But there's another tactic they're using which is not getting enough in the limelight, and we need to talk about this right now, guys. Smash up likes. Don't forget to subscribe. If you watched my video yesterday, you would have been perfectly prepared for this breakdown. We met our price target at the bottom of the wedge perfectly. My next target will be looking at 26,000 and then 25,000. Those are my key levels to be buying the dip when we get this pullback. I've explained in my video in depth yesterday. Please make sure you go watch that using at least 4, 5, 6 different indicators. I think I used in that video. It's alpha packed 10 minutes where I said confluence sits at 25 to 25.5k. So that's what I'm looking for in terms of a dip buys around this region here, just above my head here. That is where I'm looking for to get some of my entries. Now, of course, this dump here was exacerbated by the news around the CFTC. What are they doing? Well, they said that Binance offered unregistered crypto derivative products and directed US customers to evade compliance controls through the use of VPNs. Remember, we need to understand in the US, they've got their own mess going on. They've got their CFTC, which is the regulatory body for commodities, and then you've got Gary Gensler, who heads up the SEC, who's focused on securities. Now, at the moment in crypto in the US, there's so much infighting between the two regulatory bodies where they're saying, hang on, I'm taking jurisdiction over this. And then CFTC goes, no, I'm taking jurisdiction. And they can't sort themselves out. So this is a filing by the CFTC, nothing to do with the SEC and Gary Gensler. So basically, this area here, the CFTC can only provide jurisdiction around what they deem as commodities. This like Bitcoin, they're saying, Ethereum, they're saying Litecoin is a commodity. They even listed BNB as well. So what they're saying is they're providing unlicensed services in terms of futures trading, etc., and illegal off-exchange commodity options. They also said that they were directing people to use VPN. So they were trying to keep US people on the Binance.com platform, even though they weren't allowed and they're supposed to be using Binance.us. So this is very interesting. They also leaked a whole bunch of alleged kind of inter-team chats between CZ and some of his colleagues, and they said this is willful evasion of US law. Binance's reliance on a maze of corporate entities to operate the Binance platform is deliberate. It's designed to obscure the ownership, control, and location. And this is something I've said transparently. I said that the way Binance is structured right now is a mess. Now, maybe it's not, Binance's fault. Maybe that's just the way the regulatory world is working and it creates a mess, right? They need Binance.us because they're not allowed to use Binance.com, etc., etc. But there could be transparency. It could be good if there was one blog post kind of outlisting all the entities, all the structures, so that everything is clear and people can't use that as a piece of FUD. This is where things get a little bit interesting. Binance has instructed US customers to evade such controls by using a VPN to conceal their true location. VPNs have the effect of masking the internet users' true IP address. VPN use by customers to access and trade on the Binance platform has been an open secret. I mean, it's just odd. So they're trying to say, look, that there were messages between them saying that, oh, tell your customers to use a VPN and they can still then use Binance.com instead of Binance.us. Now, CZ has come out and provided a blog post where he's refuted some of these points. He said this was an unexpected and disappointing civil complaint. It's incomplete in their recitation of facts. And then he covers off a few points. He says, we are aware of no other company using systems more comprehensive or more effective than Binance in terms of KYC, in terms of anti-money laundering, in terms of all the checks we do. We check IP address, we check mobile carrier, we check fingerprints, we check bank deposits, the withdrawals, we check your credit card bid numbers. Like, what other exchange is doing more than that is what Binance is saying. They then say, we also help with your law enforcement. So what are you talking about? We handled 55,000 law enforcement requests. We froze more than $125 million of funds in 1 year and $160 million in just the start of 2023, guys. $160 million in the first quarter of 2023. So they're saying, we continue to work with you guys and cooperate. So what is this all about? We worked with you for 2 years and then you're suddenly trying to file a lawsuit. This is exactly what we saw with Coinbase. So for those people who don't like CZ and kind of have thoughts around CZ, you've got to engage your brain, right? And I'm the same person that says, look, let's not put anybody on a pedestal. Let's not put CZ on a pedestal. We should never put Do Kwon on a pedestal and nobody else for that matter in crypto. But when you see somebody like Coinbase with Brian Armstrong trying to do everything by the book, And you may claim that, oh, CZ is not trying to do it by the book, or however, you may think it's a bit more kind of grey waters on that side in terms of Binance. But you saw that he said the same thing at Coinbase. Brian Armstrong came out and said the same thing. We've been working with you, the SEC, and then you spring us with this suit and this Wells notice. Why would you do that? And we know this is part of Operation Choke Point. They purposely, by them I mean the regulatory bodies, they're purposely making the water muddy, not making it clear to exchanges where you can operate, how to operate, what are the rules. And players like Binance and Coinbase, the big guys, they don't make mistakes. They're trying to run a serious business. These are not cowboys. They're trying to run big businesses. And they're saying, what are the requirements? Tell me what the requirements are. We'll try our best to do it. We will abide by the law. But tell us what it is. And that's what Coinbase is saying. That's what Binance is saying as well. This is surprising. We've been working with you, the CFTC, for 2 years, and then you spring this up upon us. That's just not good business, right? That just does not make sense. And he continues to go through the fact saying, look, we don't trade. We're not allowed to trade. Any employees within Binance has a 90-day no trading rule to stop them from manipulating the market. He said he personally has 2 accounts on Binance, one for his card and one for all his holdings. So he himself leaves all his funds on Binance. So he's saying, look, sometimes I need to convert that into fiat from time to time to pay my expenses. But other than that, I'm not trading. So we don't know what you're talking about. So that's that on the CZ Binance FUD. And look, we know this is what the US are doing. They're doing the whole Operation Choke Point. I made a whole separate video about that if you want to go watch that as well. But on the other hand, this is the beauty of crypto. Every time one door closes, this opens another door for somebody else. Hold up. Are you tired of worrying about the security of your cryptocurrency transactions? In this crazy world that is crypto, protecting and preserving our digital assets is everything. And for that reason, I partner with NordVPN, the best VPN service for crypto traders. With NordVPN, you can be sure that your online transactions are completely secure and your identity is hidden from prying eyes. Their military-grade encryption technology makes sure that no one can access your data, even on public Wi-Fi networks, so you can trade with complete peace of mind anywhere, anytime. Guys, seriously, don't risk your hard-earned crypto and NFTs for the price of a coffee each month. They've also offered a free month and up to 60% off their plans. Oh, and they've got a 30-day money-back guarantee. Guys, seriously, it's a small price to play for a rapid, safe VPN. Definitely check it out. Link is in the description. Ijaz.uk/NordVPN. And let's get back into this video. If the US don't want to take crypto, there are plenty of other regions which will take the helm of being innovative and be a safe haven for crypto. That's proven itself. Now we're seeing Chinese banks are caught crypto firms in Hong Kong. So because China are banning crypto, they're just moving across to Hong Kong. And this is going to continue to happen, this behavior. And we've seen these games play out before. India ban it, they unban it. China ban it, they unban it. Like, it's just a mess. And let them play out their games. Ultimately, all they're doing in terms of the US is shooting themselves in the foot like we've seen time and time again. Now, the bigger risk, which we need to be talking about in this market, which we're failing to do so, is the following. We need to talk about stablecoin. Now, first, in terms of stablecoins, I want to show you this chart here. So this is showing us from 2023 what we've seen, thanks in part to Operation Choke Point. You've seen a reduction here in all other stablecoins apart from USDT and a little bit of DAI. So if we take a look at the purple line above my head there, that is USDT. And we've seen that USDT's market shares continue to climb. So Tether has continued to climb whilst USDC had their issues with the bank runs, right? We saw USDC famously depeg. We saw BUSD as our next stablecoin falling as well because they've been shut down. Paxos, who's the issuer of BUSD, has been shut down in the US by the SEC as well. So now we end up in a very difficult situation where crypto, which is supposed to be decentralized, which is supposed to be competitive, is now starting to become very centralized in the hands of few powerful people. And this is risky, right? Whether they have good intentions or not, I'm not here to judge that. But what I am here to do is to say we need to be smart. And this is a drum I've been banging for the last year to say, guys, please diversify 2 things. I want to show you the other one right after this. But for this one, stablecoins, you've got huge risk where $80 billion of the market cap is sitting with Tether. 33, which is less than half, sits with the second competitor, which is USDC. But we know there are issues around the banking and people are feeling nervous about that. BUSD has been asked to unwind. They were the second biggest exchange. I mean, DAI, which is thereafter, is tiny, 5 billion. Then the rest are just not even worth talking about. We do not have a serious competitor after USDT, which is a worry. And I've shared my concerns about USDT. I'll give them credit. They've managed to navigate this period quite well, and they've been quite strong, and they've continued their redemptions. But I do have my worries. I think they have started taking time to improve the assets on their balance sheet. They've moved out of commercial paper into some more stable assets, which is fantastic, and I'm all for that. But I want to see more progression there from USDT, and I do want some other big competitors. I want other, stable coins up here at 50 billion, 60 billion market cap competing with them. You can't have the next being less than half your size. So for me, need to be diversified across your stablecoins. Do not be holding any of your net worth fully in one stablecoin. You may think you're smart for doing that, but the one you least expect to collapse is probably going to be the one that will be next to collapse. Similarly, we got to look at exchanges. The exact same thing has started happening with exchanges. In fact, let me show you this by Block, who pulled together this chart. Look at March 2023's trading. Just here above my head. This is Binance, the big purple. Then that little slither above it is Upbit. Then you've got OKX. Then you've got a little bit of sliver for Huobi. That yellow there I'm showing you is Coinbase, right? And then that's bunched together all the other exchanges. Binance is dominating. Now, that is not necessarily Binance's fault. They're going ahead, they're executing, they are the best exchange globally. Everybody knows that, and they've done more for the crypto space than many other companies in terms of adoption. But for a healthy market, we need competition, we need diversification. So we need other exchanges to come and catch up. So if we look at this list here, again, Binance is leading hugely, 11 times the size of Coinbase, who are next. And, and then even that, Kraken is half of Coinbase. So there is no competition here in terms of the exchanges. So we need to see more. Now, that competition can come from decentralized exchanges as well. But so far, we're not seeing that type of volume come into decentralized exchanges, which makes complete sense. When people first want to interact with Web3, they want to do so using the safety of a centralized exchange. I know that. New people aren't just going to suddenly sign up to decentralized exchange and start using everything on there. That takes a little bit of a learning curve. So again, we've got to diversify. We've got to split our funds across exchanges to minimize our risk. That's my personal take on the matter. With that said, let's jump back here into the chart, and you can see Bitcoin trying its best to hold some support at the bottom of the wedge. Now, what I will be looking for is, can we get a rally back to the apex? Can we get a rally back into that 27.7 range up towards 28, and then maybe try to reverse this pattern here? Can we do something like this and get ourselves back out? Because remember, you're going to have a lot of eager shorting people who are trying to short this pattern to the downside. If you can liquidate them, you can use that as a bit of a short squeeze to work your way back up. Failing that, we're seeing a little pump here as I'm recording. Failing that, if we do get thrown to the downside, I'm looking at 26,000, and then I'm looking at 25,000 as the next key levels of support. If we take a look at the diamond pattern here on the 4-hourly chart, I shared this with you guys yesterday when we were still here in this diamond pattern, broke down perfectly halfway to our price target, which brings us down to 25.6. Again, that's the level I'm looking for. But we may see some support here from 26.5. So again, another key level of support, which maybe Bitcoin can use to bounce at this green line and try to go work its way up on its next leg. Now, of course, we've just covered off a bunch of risks in terms of the CFTC and them suing Binance. Naturally, that's going to weigh a little bit on markets. If we take a look at traditional markets and see how they're opening up as well, the Nasdaq just slightly flat there, S&P flat as well, and Dow Jones flat here to kick off Tuesday. On the 4-hourly chart here, we have indeed lost our 4-hourly EMA ribbon after we fell out from that diamond pattern, which again shows we've lost some key level of support in the 4-hourly EMA ribbon. You do not want the lines to cross over. Remember, if you haven't taken my TA course, ijaz.uk/TA, take advantage of that and learn these things. Learn how the EMA ribbon works, why it's important, how to trade using it as well. On the daily chart, like I said time and time again, even during the pump up to the upside here, I said, guys, it's perfectly fine for us to have a retest. It will let the RSI reset. We can come into our daily EMA ribbon. As long as we hold it, that's going to act perfectly, because then we can build some strength from here and go bounce with vengeance to break through 30. 30 is not going to be an easy level, and we run out of steam here. So it's natural for you to come back, consolidate, build some strength, get rid of some of those bears, and then go back to the upside. So that's what we want to see here, is a consolidation into the EMA ribbon. Now, incidentally, EMA ribbon starts at 26,000, and in the middle, you're looking at about 25, which is why I like that 25 to 26 level as a nice dip into the EMA ribbon. As long as we hold it, it could be really powerful. Zooming out to the weekly, that's when you start to see that the EMA ribbon sits at 25.4 here at the top of the EMA ribbon. So again, if it wants to come down and retest its weekly EMA ribbon, perfectly fine by me. That's healthy. It took us so long to reclaim this EMA ribbon. The last thing we want to do is just be thrown straight back down to the downside. I'd rather it come down, retest, build some strength, and then have a positive week the following week to try and build its way above that. The good news here is that the US dollar index continues its move to the downside. Another red day opening up today, which is good news. We want to keep this suppressed. We want to keep it below its EMA ribbon because crypto is inversely correlated to that. We are incidentally seeing the US 10-year yield climb a little bit today, showing that risk is rotating off a little bit, but still it's below its daily EMA ribbon, so it doesn't give me any cause for concern just yet. Fear and greed index taking a little bit of a hit down here to 59 as expected, but look, what's the lesson we need to take? The lesson we need to take right now is that Operation Choke Point is real. The US markets and the regulators are trying their best to stranglehold crypto from every single direction. They're trying to destroy the on-ramps. They're trying to stop people from getting into crypto. They're trying to make it difficult for you to use crypto and muddy the waters. But one thing we do know, every time one door shuts, there's another one which opens somewhere else. And that's the beauty of crypto. Somebody is always going to want to accept it. And if the US don't want to be the innovative player, they make the huge generational mistake of not being a place where people will want to build crypto companies, they're going to miss out on that cycle and somebody else will pick up the baton from there. But of course, the key risk continues, which is the lack of decentralization from stablecoins and exchanges. This is a worry. If something happens to Tether, if something happens to Binance, we cannot help but think how catastrophic those collapses will be. So please do your best to diversify. Thanks for watching, guys, and I'll see you in the next one.